In today's video, I am going to be breaking down a couple of different stocks and a couple of different strategies as to how you can become a millionaire with stocks, specifically these ones. I hope that you enjoy. Let's get down. Let's check these out. Okay, so the first one is Tesla, currently being traded at $733 per share at the time of making this video. Now, the reason why, of course, Tesla is in one of my top picks is, of course, the fact that Cathie Wood recently said that within 3 to 5 years that this stock could be worth around $3,000 per share. And I don't disagree, and neither does Elon Musk, apparently, according to a tweet. Now, why is this important? Well, first off, that is about 4x your money over the next 3 to 5 years. So if you were to put 10,000, let's say, into this, you would, in theory, have around, of course, 40,000. Now, that's not going to make you a millionaire. However, that combined with, of course, maybe waiting another 10 to 15 years could, in theory, if this company does what I think it's going to do, of course, that could potentially put you into that status. Currently has 20 million shares being traded every single day, and its PE ratio is, of course, super high because, of course, it has super high potential growth. Now, the thing to really watch out for with Tesla is, of course, its massive fluctuations when it comes to stock price. You may not like that style investing, and over the next couple of stocks, I'm going to give you a couple of other options. Of course, Bitcoin is an option, but again, that's got a lot of fluctuations, and really any cryptocurrency does. Now, the thing with Tesla is the fact that they have a lot of artificial intelligence. It's not just a car company, in my opinion. It's an AI company that sells hardware, and that hardware being cars and potentially someday being trucks, an SUV, or it already has SUVs, but trucks, as well as transport trucks, as well as a robot potentially into the future. This is a very interesting company. We also have to remember that it also sells solar panels and, of course, a lot of software when it comes to those renewable resources, like the sun power, solar panels, wind power, and those utility companies need that software and their batteries to be able to run efficiently. So, of course, this is not just a car company. But if we look at the 5-year chart, of course, if you bought a lot of stock back then, you would be easily a millionaire today. Of course, whatever happens in the past is not necessarily going to happen into the future. I am also not any kind of a licensed financial person, but of course, we can know and speculate. Of course, double bottom. This has some room to run in the near term. When we start looking at the earnings as well as the financials, you're going to see an even better and bigger picture. So, of course, they've had one miss, and we can see that there's massive future growth coming, potentially even into the Q3 on October 19th. Now, why are they expecting that massive of a growth in October 19th financial reports? Well, the reason is because the Chinese plant is coming up and running. And of course, this is massive news. The more cars that they can produce, the more they can sell. They're already having a massive backlog as it is, and this is great news with the German plant starting to hopefully ramp up, as well as the Chinese plant, and of course the refurbished plants that they're having in the States. This is going to be massive, massive news. Apparently, there's also stories about them not having to use as many semiconductors as before, because they found a way of using old style switches. Not too sure. That wasn't exactly a massive news story, so take that as it is. But at the same time, it's quite interesting how they can still hit their sales targets while Ford and the rest of them can't. Revenue is also growing, and so is earnings. Anytime you see revenue growth, you better see earnings growth. However, at the same time, you're not seeing massive earnings growth, mainly because they are reinvesting in their business, which is what you would want to see with a company like Tesla. Now, Apple is the next company we're going to talk about. Of course, there's rumors about Apple cars and things like that. I would not really put any kind of stock into what those rumors are. However, average volume is 76 million shares being traded every single day, and their PE ratio is pretty well in line with others in their sector. Now, Apple is a more, I would say, experienced company versus Tesla, so they do give you a dividend. They do increase the dividend, which is nice. And they have more predictable growth. You don't see what you see with Tesla like this. You actually see a nice steady ramp up. Of course, there is sometimes that there are massive sell-offs. However, at the same time, you have a double bottom twice here. There is probably more room to run. Anytime you see massive volume with a downturn, unless it's bad news about the company and not about the economy, then at that point in time, we can see that it's usually good time to grow, buy, anytime that there is a massive downturn in the stock with heavy volume. We can see here that there was capitulation there, and that would have been an absolute fantastic time to buy. We can see on this chart that, of course, they do grow their dividend, but it's not a dividend paying company in a sense of massive dividends. It's just going to be small incremental gains just to make investors happy getting a dividend. Essentially, that's how they work. See, when it comes to Apple, they do pay a dividend, but it's not like a Canadian bank or a ETF that is basically having a high dividend. The idea behind Apple is to essentially pay you a dividend to make you happy throughout your time investing with them, but at the same time they are more or less investing the money back into their business so that they can grow it bigger. What you're getting there is underlying growth and not necessarily dividend growth. Even though you do get small incremental gains to your dividend, it's not something you can live off of like a Canadian bank or a higher dividend ETF like a ZWC or a ZWK. Now, when we look at the earnings, of course, they tend to beat earnings every single time. Never doubt Apple. But again, what we do see here is quite interesting, and that is revenue growth and not necessarily earnings growth. So the reason why this is interesting is, of course, could the earnings be lower because of having their stores closed and still having to pay to have that space without being able to open because of the pandemic? Or was earnings lower because they're reinvesting more money into their business to create something big and massive into the future? Now, this is what I always like to look at, is revenue versus earnings versus previous years. And we can see that, of course, there's higher revenue 2020 versus 2018. However, the earnings are lower than 2018, which to me tells me that they are probably investing heavily into something new and something big. Alphabet, also known as Google, is also a very good company. Of course, they have created essentially a brand new economy. And anytime a business can create a new economy, guess what? That company is going to be massive and they're going to be too big to essentially die. So for example, we have Google who bought YouTube, who then created the creator economy where people create videos like this one today and get paid for it by advertising. But also Apple is another one where they basically created their own economy. It was called the app economy, where now big companies have been created around being able to put apps onto that phone, onto that iPad, onto the Macs. And of course, Tesla, the reason why I think, again, that one's going to grow is because they're going to create their own economy again with people purchasing Tesla cars and then using autonomous driving to be able to rent those cars out as taxis. And then you can essentially have a taxi do your work for you. Instead of you driving an Uber, your car does everything for you, and then at that point in time, you then don't have to work at all because your car is making you money. Now, is that coming anytime soon? It's probably not going to come until probably 2025, in my opinion, but at the same time, that is going to be a future economy where people can purchase cars and then use them as taxis without even having to drive. So you could be sleeping, your car could be making money, sort of like a YouTube channel in a way, where you sleep and you make money. But Google is very interesting because of YouTube, in my opinion, but they invest heavily into AI. Their average volume as well is 1 million shares traded per day, at least on this version of the stock. They also do have Goog with an L on the end. Just two different stocks that do essentially the same thing in a way. But anyways, their PE ratio is again in line with, of course, Apple. I would kind of lump these two companies together. Even though Google is more of an advertiser-based company, we have to remember that they also own Android, which competes with Apple. So because of that, I would lump them in the same, and 31 versus 30 is very close. Their growth is also very sustainable. We don't see any massive ups and downs. We also don't see any sideways trading and then just a massive jump like we see with Tesla. So very nice and stable. Again, look for the massive downturns with massive volume. Anytime you see massive volume, it's time to kind of buy. Because usually if it's a massive volume in a downturn, unless there's massive bad news about the company like shutting down, at that point I wouldn't. But if there's a company like Google, for example, that just has bad news every once in a while, yeah, it's time to buy. Now, when it comes to their earnings, they've obviously blown out earnings all the time. When it comes to their financials, they have steady revenue growth. They also have steady earnings. So, of course, if you're looking for a steady growth earning company, Google is generally the best way to go. Also, you can't really go against a company or bet against a company when you literally have a platform that just literally everyone talks about in the entire world. So if you have a question, what does somebody tell you? Go Google it. I don't know the answer. Go Google it. Yeah. That's like almost like go check the dictionary. Yeah. Go Google it. It literally is part of everybody's lives now. And then if you want to figure out how to do something, how to play basketball better, how to play video games better, how to do plumbing in your house, how to tie a tie, you go to YouTube, and that's owned by Google. So they own the market of the internet, essentially. Coinbase is, of course, a massive possibility and potential for the future. Now, what I like to look at with these companies is not just the PE ratio, which to me is crazy that it's only 20, but also the fact that it's the market cap. It's a $73 billion company. Now, that may seem huge, but when you're considering a Tesla that's getting close to $1 trillion, a Google that's over $1 trillion, an Apple that's over $1 trillion, this could go 10x and still not hit $1 trillion. You could literally turn $10,000 into 100 if this obviously grows and still not reach the point of a Tesla or a Google or an Apple. This is quite interesting, and let me explain why. Because currencies like Bitcoin, Ethereum, and all of those are not going anywhere. They're only going to grow bigger. Whether their valuations go up or not, it doesn't necessarily matter. However, when it comes down to it, is with these cryptocurrencies, blockchain-style technologies, it's not going anywhere. There's more and more companies and more billionaires who are investing in this type of stuff. And because of that, when you start looking at Coinbase, they are very heavily into that style of stuff. Bitcoin, blockchain, cryptocurrencies, things like that. And because of this is not going anywhere. There's more and more countries saying we are no longer going to supply cash. We are going to be basing our economy off of Bitcoin or off of Ethereum or whatever else. And because of that, I personally believe that Coinbase is essentially the future bank. And if that's the case, if Coinbase is a future bank, guess what? They're going to have massive growth going into the future and potentially 15 to 20 years down the road start paying a dividend. This is an actually interesting company to invest in right now. Obviously, do your own research on it, but this could be potentially a 10 to 20 to even 30x, even 100x company over the next 20 years. And if you start looking at a 20 to 30 year span and start finding companies like this one who has potential, you could literally turn a $200 investment into something crazy in 20 years. So we have to remember that. We have to find companies like this, invest small amounts at first if we have a belief in their system. And then if we start seeing an outcome of, hey, they are performing the way we originally thought, let's start loading in a little bit more money and see if it keeps on performing the way it should. Now, that's how I personally like to invest. I like to invest in smaller companies, a couple of $100 here and there, and then wait 5-10 years and see where they are. And I don't do this very often. I've done this with companies like Tesla and a lot of different marijuana-based companies like CGC, which is, of course, Canopy Growth. I've done this with a lot of them, and it's worked out for me so far. Just don't invest a lot at first unless you just have a strong belief that they're going to overperform or outperform the market. Because remember, I'm personally a dividend investor. I like to get money coming back in from my investments. I just really want to point this out as well with Coinbase, and it hasn't been out on the stock market for a while. It's had a miss already in their first quarter. Second quarter, I have to look up the numbers, but when it comes to 2019 and 2020, we can see massive revenue growth, but also massive earnings growth. They've gone from a negative to a positive. This is very good. I generally stay away from companies, other than Tesla, obviously, that have negatives, because if they're not bringing in cash flow, then if they're burning more cash than they're bringing in, it's a dangerous company. But as soon as they're still a so-called speculative company, and they're bringing in cash flow and positive cash flow, that's when it starts getting very interesting to me. Coinbase is also a Cathie Wood stock, so of course if you want to ride the Cathie Wood train, this is an option. And then of course the stocks that I personally love, the banks. The Canadian banks are absolutely amazing. They've been amazing for me. National Bank over the past 5 years has been doing crazy. Their dividend is quite low right now. It's 2.89. However, Canadian banks haven't been allowed to raise their dividend. I've said this in multiple videos. However, volume is also very good. Their PE ratio is a bit high considering it's a Canadian bank. In my opinion, anything above 12 is kind of scary to invest in. However, with National Bank, they actually have a very good outlook because of their past. They were actually one of the few companies, or banks I should say, that grew during this period of time. Most of the Canadian banks just basically went sideways, while the National Bank grew during this time. Of course, with some downturns, but what doesn't? And then, of course, there was that massive pandemic, and it's just absolutely exploded from that point on. They are a very strong dividend growth company. Of course, they just haven't been allowed to pay or allowed to raise a dividend since the COVID crisis started. They have had pretty solid revenue growth and pretty solid earnings growth until 2020, but of course they're going to have some downturns when it comes to 2020. 2021 and 2022 should be a lot better, and of course they have been beating estimates all of the last 4 quarters as well. Bank of Nova Scotia is another one. The reason why I picked this one is because of the dividend and their dividend growth. As I was mentioning, when it comes to the Canadian banks, they pretty much basically traded sideways for a long period. Of course, Bank of Nova Scotia did have a little bit of a downturn in 2018, or throughout most of 2018. However, they pretty much traded sideways when you look at the lows there. Of course, when the pandemic hit, it just absolutely collapsed, but of course it's starting to stabilize again, getting close to the top that it's their all-time high. However, it's still getting kind of interesting. Will it have another downturn? It's going to be hard to say. However, at the 4% dividends, it's going to be pretty strong. As we can see, that's strong dividend growth as well. Again, not allowed to pay a dividend not allowed to raise a dividend for a while because of the pandemic. However, that's a good thing because during the pandemic, their revenue and earnings dropped substantially versus the others, and they missed their third quarter of 2020. However, they've had some pretty good quarters since. Now, the reason why I really like the Canadian banks and to say the Canadian banks could make you a millionaire in the future is the fact that they do have pretty steady 5 to 8% growth every year, and they pay generally around 3 to 5% dividends. They're going to be raising their dividends substantially next year once they are allowed to, because they've been making cash like crazy. So because of that, I think that they are a strong buy right now to, in the future 10, 15, 20 years, to help you become a millionaire. Hope this video has helped you. If it has, hit that like button and subscribe, and I'll see you guys again next time.